A very good morning to everyone. My name is Victor, and I'll be your host this morning on the morning market review. So this is right 8 a.m. on a Tuesday morning, the 30th of April 2024. And I'll just like us to have more persons on the call before we fully commence, in order to avoid back and forth, because some other persons just join the call and they tend to drag us back most of the time. So let us just wait like 2 or 3 minutes for us to have a good number of persons on the call. Then we start off this morning.
Years or 10 weeks. What matters is whether or not they're willing to do what is necessary to make the friendship work. So if you need no one friends to have, it's just a good point.
Please, just a reminder, once you're on this call, everybody be mute. We are starting in the next 1 minute. I just wanted us to have more persons on the call in order to avoid back and forth. Trust me, when we start the market review, people just join in and start asking questions about things we've done before. Not that I'm waiting for everyone, but just a good number of persons, all right? Okay, so let's start right about now. Thank you for your patience. Thank you for your patience. Thank you, Gabriel. So welcome once again to Morning Market Review. So we are going to start with the fundamentals. Now, our aim is to analyze the markets and at the end of the day, determine if we are going to be buying any instrument or we are going to be selling the instrument in order to make profit. Okay, so, and one of the ways of doing that, we have different ways of doing it, but the major ways of doing it, we have the fundamental analysis, where we look at the economic events or the news, and we also look at technical analysis, where we now go into the charts and look at the pivot points possible reversal points, continuation points, looking at the possible moves of the market on the chart. So we are going to be starting from our technicals again this morning. So basically for today, the Tuesday, the 30th of April, 2024, we are going to be looking at the major news that can affect the market or can alter the delicate balance between demand and supply. For today, I think some of the news, such as that of the Chinese one, NZD, AUD, they've passed since 2 a.m. in the morning. 2 a.m. in the morning, those ones have passed. Now, the ones that we're expecting, right about now, we're expecting this one at 8:55, German unemployment change. Now, this is a low impact news based on the impact. If you look at this column here, sorry, this row, you notice this impact. All right, this is impact, the level of impact that it might have. Now, the ones that carry this yellow envelope, they have low impact in the market, right? So, but we just still want to know. Now, the ones with the brown envelope here, they have medium impact, so we also need to know them. But the ones that are major are the ones with the red envelope, which has high impact in the market. In other words, it can move market massively in a few moments, all right? It can become volatile for the market when such news come out. So the ones we are going to be concentrating on are 10 a.m. Euro. So we have the core CPI flash estimate as well as the CPI flash estimate year after year. Now we're looking at CPI, that's a consumer price index. Then also we have the Canadian GDP released monthly. This is the monthly release for the Canadian GDP. Then we'll go over to the US as at the same 1:30 p.m. We're looking out for employment cost index. That is the amount it costs employers to employ labor, both in the civil service and the private sector. How much does it cost them to employ labor? So if the prices of labor is increasing, well, so according to what we are expecting is actual greater than forecast is good. So we expect that by 1:30 p.m., whatever figure should come out as the actual, it should be greater than 1.0. It should be greater than 1.0, which should be good for the currency, which is the US dollar. At the same time, by 2 p.m., we have the S&P CS composite. Then lastly, for the US, by 3 p.m., consumer confidence. A lot of survey goes into consumer confidence to check out the confidence that consumer has in businesses, their activities, So it's a leading indicator of consumer spending. If they don't believe in your product, they don't believe in what you are selling, they wouldn't buy. So the consumer confidence is very, very important. So generally speaking, once we are, we get to like 1 p.m., then the market should become volatile, especially for Canadian dollar, US dollar. Then late in the night from 11:45 p.m., we are looking at NZD employment change. NZD employment change, and also unemployment rate. Now, employment or unemployment is one of the major leading indicators for all of these major currencies that we are trading. These are one of the ways they measure how viable the economy is per time. Employment, inflation, as well as the GDP. These are one of the major leading indicators of how viable an economy is. So this should be one of the biggest news for NZD every month. It's almost equivalent to the NFP we are expecting for the US dollar, which should be by Friday. Okay, by Friday, we are looking out for NFP. So the market is expecting a major Friday. So please watch out for NFP. One of the good things is that you are not left alone alongside with you. So we are doing it live. Just contact your account managers. Okay, you are ready for NFP. Thank you so much, Benga. I hope every other person is ready. Let's come and maximize profit, make a lot of money, you know. And it's not just making a lot of money, making a lot of money in few seconds or few minutes, you know. They are good. All right, so basically these are the fundamentals we're expecting. We'll concentrate more on the US dollar, and once it is 1:30 p.m., from then, you know, we fire down all of the fundamentals. We're ready for NFP, Abiodun. That's good. If every other person is ready, you know what it means to be ready. Does anyone know what it is to be ready for NFP? You are ready to trade. Okay. All right, let me confirm. Can everyone see my chart? Please, if you can see my chart, just yes on the chat box. Aha, good. Fund your account, Anthony. Well, so fund your account. That's one of the ways you are very ready for NFP. All right. Fund well. Okay. Yeah, that's good. Fund well. Who said that? Galaxy. I need your name. Good. If you have funds in your account also, and some persons can decide to, you know, see where uh, these are days where people can make good amount of money. For you to do that, you need a lot of money in your account. All right. Impact news, are they tradable? Yes. At Organ Creed, those ones with low impact news, they are actually tradable. But the problem is sometimes you wouldn't even know that there was a news because the market might not really move, and if it moves just very little, so a lot of times it's not really profitable. So that's why we don't really concentrate on them and trade them as much as the high impact news. Right? So high impact news are actually the best. Wow, Abiodun, you are ready for NFP to at least 2M. That's awesome. That's awesome. All right. So if you can make 50% of your 2M, you know, that is 1M. It's very possible. Or you do 100%. All right, I can assure it's very possible. Just join the live trading sessions for NFP or live trading session for NFP on Friday. Just join the session and maximize profit. FOMC news tomorrow. Yeah, tomorrow is Wednesday. Oh, sorry, I skipped because possibly public holiday. Okay, let me. Yeah. Yes, yes, yes. I'm very sorry. Thank you for calling back my attention. Who called back my attention to that? All right. Thank you so much. So please, let's recap. There is FOMC tomorrow, Wednesday. Now, FOMC is one of the ways, it's a committee, all right, set up to determine the interest rates, you know, for the US dollar. They are in the Federal Reserve. Now, these guys do more of, how do I put it now? Regulate the economy when it comes to the inflow of money. So they are part of the Federal Reserve, but it's a committee in the Federal Reserve that look out for, that's the Federal Market Committee that sets interest rates. So now these guys will have they will set the interest rates, that's federal fund rates, they'll give a statement, and they'll also have a press conference. So now all of these activities that they do, all right, within 7 to 7:30 p.m. moves the market massively, all right? Massively, the market moves. There's a trick to trading FOMC. Most of the time, from experience, FOMC tends to go both ways. So if it goes down, a lot of times it does some level of retracement. And if it goes up, a lot of times it does some level of retracement, okay? Yeah, sure. Oh, now we can't trade it live with you. It's in the night. It's around 7 p.m. then 7:30 p.m. So we won't be available to trade it with you. But please attend Rally Academy and you'll be taught how to trade simple fundamentals. How to trade fundamentals. All right. Okay. So thank you very much for that. Let's go back to our chart. I'm sure you can all see it now. Now, for today, let's look at certain instruments. I think let's start from the euro dollar. Let's start from the euro dollar. From the euro dollar, let me look at one of my. Okay. So now this is euro USD. So what is market possibly going to do for today? Now, over time, we have seen the euro, you know, competing massively with the dollar. And currently, the euro still does. I noticed that a lot of times the dollar might be quiet in the morning. Let me check my. The dollar might be quiet in the morning while the euro tops. And by afternoon, the dollar tops, the euro comes down. So for today now, we are seeing that the dollar is on top of the euro. Now, euro is quite strong, but dollar is very strong. Right? So I can bet you that the euro will give way for the dollar. Now, that means price is most likely looking at pulling down. So let me teach you a simple technique to trading. A simple technique to trading any market whatsoever. Any market. Now, just follow my steps. Now, you need to know that what price is actually looking for is called liquidity. That means a pool of fund. All right, let me just put it that way. Liquidity, pool of funds. For instance, if I'm a contractor and I get a contract for the government to supply 1,000 hillocks, all right, the government wants to share the hillocks to their directors in all the federal ministries, all right. So 1,000 hillocks. Now, I as a supplier, I do not need to have the hillocks. So what I do is I start looking out for people who sell hillocks, companies that either produces or sells hillocks. So I would prefer the companies that have a lot of hillocks. So some companies might have like 50 at a time, some might have 100. I would even prefer the one that has 500 hillocks. I can buy from them, I can get quantity discount and the like. It makes the job easy for me. So in other words, price is looking for that same thing called liquidity in the market, pool of funds. And how do you locate liquidity? Where there is a gathering of candles. One of my colleagues, we call him prophets, calls it the gathering of brethren. Something like this, where there's a cluster. Now, if you notice from here all the way to this point here, there's like a cluster, right? Let me change this color. Perhaps something we can relate to it. Okay. Now, all of this place here, let me bring it closer. There is somewhat of a cluster. I mean, price find it hard to go higher than here. It's ranging. It's ranging at this point, up, down, up, down. So there's a cluster around this area. All right, this is like a cluster where you find out that the candles are not massive and at the same time they are ranging. Where else do I have a cluster? I have a cluster around here also. I have a cluster around here. So price is just doing up, down, up, down, up, down, up, down, up, down. Now, this is liquidity. What the market seeks, right? That's what the market look out for at every point in time, or most times, 80% of the time, market look for liquidity. Now, the other period are where you have impulsive moves. An impulsive move can come from fundamentals. If you've experienced fundamental before, you notice that once a news comes out, all of a sudden, okay, down left. Thank you very much. Thank you. Please, I'll need your name instead of Galaxy Tab. I'll need your name. All right. I prefer to address you by your name. Thank you so much. Now, what am I trying to say? I'm saying that most of the time, 80% of the time, the market just moves looking out, seeking liquidity. And the other times it's not seeking liquidity, it's usually an impulsive move. Impulsive move in the sense of fundamentals. Price just move all of a sudden because there was a news. For instance, if the news we are expecting today by 1:30 p.m., by 3 p.m., and NZD by 11:45 p.m., if it comes out, you just notice a massive move in the market. That's fundamental, right? It can be very impulsive because something is pushing it that way. Now, all things being equal, if I don't have fundamentals, then how is market moving? It's simply looking out for liquidity. Now, this is how you locate it, just like I said, gathering of brethren. Now, how do I trade it? For instance, on this particular day, there was liquidity up here. Now, what price does is that since there was liquidity here, there's a range. It means that this upward move that I have from here, from this level here, is expiring, is losing steam. Market wants to balance itself. All right. It's just like you running a 4x4 race. You can't start hot from beginning and finish like that. At some point, you need to slow down or keep your pace. Then towards the end, you pick up again. All right. So once the market is moving in one direction, it just can't keep going. It needs to take a breather. Take a breather, rest a bit, then continue. I don't know if you get my point, right? Takes a breather, rest a bit, then fire down again. Keep going. So price will always look out for that liquidity. Now, this is a liquidity point here. There's a range. When price opened the following day, what happens? It came down. The overall move is that price is still pulling up. I think I've jumped one step. I've jumped one step. I've jumped one step. Forgive me. I've jumped a step. Now, the first step is that you should be able to tell the directional bias of price. Directional bias. That means for the next few days, possibly few weeks, where is price going to? Is it going up or is it going down? So if I know price is going up, then I will be looking out to take trade in that direction. Just look, Japheth Peters, how do you get NZD news to know what to trade? Now, please, just from your Forex factory, you'll see NZD. Now, this is my Forex factory. This is for today. Let me go back to today, Tuesday, April 30th. Now you will see NZD. Let me see. Okay, for NZD as at that time, right? So back to my line of thoughts. First things first is directional bias. I can do that with my 4 hours time frame, and I can as well do that with my daily time frame. Now, this is my 4-hour time frame, and then this is my daily time frame. Okay. Now, on my daily time frame, I'm not talking about the overall move now. On my daily time frame, what do you notice? I notice that there is a move up, right? Now, at some point, there was an upward movement. Later, it changed to a downward movement, right? Sorry. Later, it changed to a downward movement. Now, price is doing what again? Is moving up. Now, this is my daily time frame. I can do it for my daily time frame. And sometimes you can as well get the same thing from your 4 hours time frame if you know what you are looking out for. Now, I can see that for the past few weeks now, right, since middle of April, price has been doing more of an upward move than a downward move. Now, that is my directional bias. I want to follow what price is doing immediately. Now, I come to my lower time frame, for instance, my 1 hour time frame. And on my 1 hour time frame, this is how it looks like. I don't know if you're getting my point. This is exactly how it looks like on my 1 hour time frame. Now, since price is going up, what should I be doing more? I should be buying more, right? If price is going up, what should I be doing? So you can click on the link. Thank you, Gabriel. Japheth Peters, you can click on this link dropped Forex Factory on the chat box. Then it will take you to Forex Factory so you can trade it. Sunday, you need to contact your camera. That's another different training entirely. We can't talk about it now because, So what I'm trying to achieve here is once we can get euro dollar, then we can do the same thing for every other thing. Okay. I think the essence is not just for me to tell you, okay, buy this, sell this, buy this, sell this. If you know how to do it, I think it'll be more profitable for you. Okay. It'll be way more profitable for you. Okay, so now I can see that over time, price has been doing more of an upward movement. Hence, it means that I should be buying and not selling, or I'm only selling retracement. Now, if I want to buy, where do I buy from? I need price to give me liquidity areas for me to buy from. That means I need to see cluster. Okay, so that's what brought us to all of these clusters, all of these clusters, all of these clusters, right? So, but I want to see the cluster down, not up. Did you get my point? I want to see the cluster down. The principle of trading says buy at support and sell at resistance. Support is usually below, support is down when price falls a bit, all right? So for instance, this liquidity forms a support area for me, right? So once this happens, it means that I can extend this. After this happens, I can use it to trade for the following day. What do? I mark what happened here yesterday, the previous day, and I extend it into the future. I extend it into the following day. Now, what happened? As price went all the way up, guess what? It came back to look for that same liquidity of the previous day yesterday. The moment it could tap into that liquidity zone, there are a lot of clusters, a lot of human beings willing to do transactions. Now, once it picks, got into that zone, what happened immediately? Started flying back up again. Right? So this is what I'm looking out for. Started flying back up again. So I'm looking out for that liquidity areas for me to know exactly when to join this buy, or if it's a downward movement, when to join the sell. Right? Now, this same liquidity zone has been forming support for us for quite some time now, for some days, basically since last week. Because if I extend it into the future again, you will notice that the same zone, the following day, price went up, it came back, tapped into it, went back up again, tapped into it, went back up. Now, price is there again. And what are we seeing that price is doing? It's trying to work its way up, right? I don't know if you are seeing what I'm seeing. So, what do you think will happen to Euro USD for today, given the explanation I've done? If anybody understands, should Euro USD or Euro dollar go up, or do you expect it to come down? What do you expect? Thank you very much, Adenuga. Buy, it will go up, go up. Good. Now, I'm sure for some persons, this is just like a light bulb moment, like, wow. So if you don't know what you're looking out for in the market, you know, just scampering all about. So with just this simple explanation, I am much more confident that price will go up. Now, but this is the chart. It's not 100% that price will go up. But what I'm going to do now is I can go in for a buy, but if I want to be safe, then I can have my stop loss somewhere around this level here. Basically below the zone. I can have a stop loss. Should in case anything happens and price all of a sudden start tumbling down, oh, just close me out of the market, let me not lose more. Then I look for the next support area again, the next liquidity, which if I zoom out and I bring it all the way here again, I would notice that there is another support area or where price has been coming from. Okay, this area again is another liquidity zone. So I'll wait for it to get there. Once it can fall from there all the way to this point, all the way to this point here, which coincide with here. Let me mark it. Which coincide with this zone. Okay, then I go in for another buy. So what I'm doing at that point is I am turning my loss here into a win from here. Now, because if price can get here and it starts going up, it will go up massively. So I can maximize profit. I can make a lot of money there. Or I can even use higher lot size or have multiple entries because of the level of confidence I have. These are days where you make a lot of money in the market if these things fall to play. So we are buying the euro dollar. So guys, we can go in for a buy on the euro dollar and you can have your stop loss somewhere around here. Unfortunately, our stop loss will be, wide. Like I would have preferred if entry point was somewhere around here before I take the buy so that my stop loss will be somewhere down. So in other words, price does not just move because it wants to move for moving sake. It's moving towards a particular thing. And that is what we are looking out for. What are you looking out for? What is making you move? Where is that thing? Once you can find it, then you know where price will most likely head to. So we are buying the euro dollar. Now, the numbers, like it's an instant buy. The stop loss is at 1.06711, 1.06711, stop loss somewhere around here. Okay. Then AUD USD. I think I've marked this guy already. Okay, let me show you something very interesting about the AUD USD. Something very interesting about AUD USD. Now, since January, AUD USD has been doing almost the same thing. Now, if you remember the steps we took from Euro USD, the first thing we did was to determine our directional bias. Is price going up or is it going down? And how do I do that? With my 4 hours time frame, right? Good. Or my daily time frame. You can get the same thing from. I'm not looking out for the yearly movement. No, I'm looking out for the immediate movement. Maybe within a week, within 2 weeks, within a month, or within a few days. So my 4 hours time frame is showing me that AUD USD is doing what? Has been going up. Abi? Good. Or my daily time frame can even confirm the same thing for me. My daily time frame. For the past few days, AUD USD has been doing more of upward movement than down. Although today I'm seeing a massive bearish candle. Yes, but that does not invalidate what I've been seeing here. So that means we are looking out for price pushing to the upside, right? Good. So I come to my lower time frames, my H1. You can even go as low as, what do I call it? 15 minutes, 30 minutes, 15 minutes, except you're a scalper that wants to use your 5 minutes time frame and the likes. The dollar index, yeah, this is the dollar index. I have a dollar index here. The dollar is still fairly strong, 63%, still strong. The AUD is down, AUD USD. So yes, that's why you are seeing this massive downward movement. Okay, now it's seeking out for areas of liquidity. Now I can have liquidity at different points. For instance, let me take this out. So I've determined that my directional bias is up, at least up. And I confirmed that from what I've been seeing from the past, how many days? Since almost 2 weeks now, seeing that same upward movement. So all things being equal, except price about to reverse. If that holds, this is where I'm checking the percentage. This is it. I have it on my chart. It's something called the currency, MT4 currency power. Once I apply it to my chart, I see the strength of currencies, real time. Okay, real time and changes. Except you don't have this, then you can go to this site, livechart.co.uk. Okay, livechart.co.uk. Once you're there, you come to currency strength meter, and it gives you the strength of currencies in bars. So you can see that euro is strong, dollar is strong, but AUD is down. JPY is down. CHF, NZD, CAD, they are all down right now. AUD, JPY, CHF, NZD, CAD, they are down. But as they are down, mine is telling me that as much as they are down, NZD is lowest, CHF follows, AUD, then CAD, then JPY. Okay? So, yes, upward movement, looking out for liquidity. So where do I get liquidity? Now, for those who still remember what our liquidity is, cluster. So many candles almost in one place. For instance, I have this here as a liquidity point. Oops, let me, I have this cluster here. So price needs to come and tap back into that cluster. That is, once it taps back into the cluster, what happens? It pulled up, right? Now, the following day, what happens? I have another cluster here before price closed. I have this one, and I have a little cluster also here. That means if price for this following day comes here, it can pull up. And if it doesn't pull up here, it goes to the next lower liquidity before it pulls up, right? Good. So that being settled. Now the following day, what do I have again? I have liquidity at like 2 points. Okay, so this day, Price came all the way down. So if I extend this, let me take this out. If I extend this, my liquidity, you notice that the moment price tapped into what happens, it started pulling up, right? And price respected the same liquidity because over here, I have another form of liquidity here. I have another one, this cluster, right? But this one and the one of the previous day, they are too close, like they are close. It can be merged, right? So if you merge it and extend it into the future, what do you notice? Price taps into them, then it pulls, continues going back up. So it's just like you go, you come, like, you know, you go, you come, you go, you come. But in general, you are still going up. So we can keep doing the same thing, the same thing, the same thing, and we'll be noticing the same thing. Now, does it happen every day? Not exactly. But if you see it happen, it's a good trading opportunity, right? So I can see liquidity here, price came back, tap into it, and started going back up again. Okay. So for yesterday, I only had liquidity as a resistance, somewhere around here as resistance. Now that explains why when price opened, it just started falling. So, but I need liquidity down because price is pulling up. I want to buy from support. I need liquidity that forms support for me. So it's either I take that of yesterday, the previous day, sorry, 2 days ago, which was Friday, 2 trading days ago, and extend it here. All right. So you can clearly see that if that is the case, this is where we ought to be buying AUD/USD from. All things being equal, price still want to keep going up. I don't know if anybody has anything contrary. Okay, let me see. I have a lot of messages. When dollar index is up, right? Good. Now, dollar index is off, but we are trying to follow technicals. It doesn't mean dollar will remain up. Technically speaking, I'm trying to tell you where you ought to be buying from. Okay, what if dollar index is not up right now? That's the best point you buy from. What can make it, the only thing that can happen now is it will most likely slow down. It will most likely slow down the rate at which the euro dollar can start buying now. It will slow it down. You will not really see that buy massively right now. It will slow it down. But once the dollar just give way for the euro, it pulls up. Now, what can happen now is that you'll be seeing range. It can't go up, but it's not supposed to go down. There's a support here stopping it from going down. But yet, the dollar is up, then against the euro, it can't pull up. It can't pull up. So it will be ranging, waiting for the dollar to drop against the euro, like you are seeing right now. Then all of a sudden, it starts pulling up. Okay? So, yes, we are still buying the euro dollar. And AUD/USD, what do I say we are doing? Thank you very much, Anthony. Thank you so much. So what do I say we are doing on AUD/USD? Based on our explanation, if anyone remembers, Whoa. Can you still hear me? Can anyone hear me? You're welcome, sir. You're welcome at Dr. Baba Kingsley. Okay. Oluwashola Odu, buy. Okay, so I guess I'll have to recap. Okay, we are buying. Okay, good. I think some of you still get it. Now the last thing now is risk management. Risk management, like I said, this is not 100%. All of a sudden, you can just see that things can just change and it doesn't go your way again. So risk management means that I apply my stop loss somewhere below the zone, right? Now, if it will be too close, if I put it somewhere around here, it might take it out. So I give it a little bit of room. So much so that I have my instant buy here, like we are buying right now. Then I have my stop loss below in case it does not buy. Now, in case it goes south and it takes out my stop loss, it's not the end. I wait for price to tap into my next liquidity before I go into the market again. Now, where do I have that? Where do I have that? I have that here. So all I'll just do is to extend this. Hey, sorry. That's why I usually like leaving things like this on my chart. It makes it the work simple for me. So it means that, let me compress this guy. Let me merge it with this. Let me merge it. This level here. So I'll have to extend this level to the future. So if this guy breaks this level, by breaking it, I mean it comes all the way down instead of going up as we are expecting. The next place for me to buy from is here. Now, if it doesn't buy from here, you should buy from here, except your village people is involved. Sorry, village people rather. That's on a lighter note though. So I do the same thing here, buy here again. And what do I do? Risk management, right? I apply my stop loss. So this is how to trade. Now, you find out that in a week, if you can religiously or rigorously follow price and you get these entries and you have like 20 entries in a week, come on, you should have more than 10 in your direction that goes your way. You should have 15. You can have 18. If you're even lucky, the whole 20 goes your way, maximizing profitability. And the ones that doesn't go your way, it takes you out, but not in a massive loss, so much so that your next trade that you get right, you cover up. So if you keep following the same principle, you can hardly lose your account. I don't know if anybody that has lost their accounts before, account just disappeared all of a sudden, they took wrong trades. Now, this doesn't mean you should go and take excessive lot sizes and the likes. But with this kind of trades, this level of confidence, you know where price is going to. I think my lowest lot size recently is 0.25. Sometimes I do 0.5. That's half of a standard lot. And if I'm so sure, if you start going my way, I go in on a standard lot. My principle is what is worth doing is worth doing well. Okay, can I call out the stop loss? The stop loss is for Euro, AUD, USD. Stop loss for AUD, USD. Let me have it. Okay, somewhere around here is 0.65035. Stop loss for AUD, USD, 0.65035. 0.65035. So we are buying AUD, USD. Sorry about that, Dorothy. How do you insert period separator on your laptop? Just hold down Control, then click Y. Control Y. Hold down Control, then click Y. Just like this. Control Y. You see it's out. Then I do it again. Control Y. It comes up. Period separator. This stops here. Okay. So that is. So what's happening to our trades right now? Our euro dollar has not started pulling up, right? Just wait for it. But our AUD USD, is anybody on the trade already? Is anyone on the buy? Okay, so let's quickly move. I have just one more currency. Then you can apply it to every other thing you want to trade. Which currency should we do it in? Yes, please. Olubenga Babatunde, we are doing an instant buy on AUD USD. GBP USD. Okay. GBP USD. Now, forgive my choice of language. No, my people perish because of lack of knowledge. Ignorance can. There are a lot of things. Ignorance is there. And secondly, greed. A lot of us, we are greedy. So we can lose money doing that. Indices. I've given stop loss on Euro USD, but here's the stop loss again. Stop loss on Euro USD is 1.06711. 1.06711. 1.06711. Now, in case you miss anything, like the explanation I'm doing from the beginning, you can also watch a recap of this video on YouTube. So if you head on to YouTube right now, this video is being live streamed, then you can watch it from the beginning, anything you missed, okay? So in case you ask some questions, I'll just refer you back to the video. So let's go to GBP USD. That one came first. GBP USD. That guy is always far. Okay. All right. So please, let's do this together. There's no TP, Mrs. Agide. There's no TP on both. I didn't give TP on rather on Euro USD and AUD USD. Okay, so we are looking at GBP USD. Let's do this together. What is the first thing you need to determine to trade anything? The first thing. Anybody? It's an open question. Trend, directions. Thank you. Trend, direction, or directional bias. Exactly. You all get it. Look for trend. Thank you so much. Good. Now, how do we do that? What time frames? What time frames do I recommend? Thank you. Directional bias. Thank you. Thank you. You all got it. So what time frame? 4 hours, 4 hours, or 4 hours or H1, 4 hours or daily. Yeah, it's 4 hours or daily. In case you missed that, it's 4 hours or daily time frame, either H4 or D1. Yes, H4 on D1. When we come back to H1, is to look for our entry points. All right. Thank you. H4 or daily. So let's use H4 and see what's our directional bias. So H4 now is showing me, what is it showing me? So what's directional bias? I'm on H4 right now. Is it up? Is it down? The directional bias, the current movement, up or down? Up. Excellent. Excellent. Okay, someone said down. That is Oluwatosin. Tosin is not down, it's up actually. Now, I'm not talking of the overall trend. There's a difference. I'm talking about my immediate directional bias because it alternates. It changes from up, down. All right. As at this time here, it was down. Now, currently is up. Okay. Currently is up. So that is what I want to follow. Okay. Good. Thank you. The down is a pullback. Yes, but I don't want to really dive into that right now because we'll now start doing another level of technicals, market structure, where we'll talk about the general trend, overall trend. Overall trend. Now, the truth is the overall trend for GBPUSD is a downtrend. Yeah, it's a downtrend. The overall trend. How do you do that? Your weekly time frame. Your weekly time frame will show you. So this is my weekly time frame on GBPUSD now. Where is it heading to? For the longest time you can see now, it's down. Now that's the overall trend. It's different. If I'm waiting for the overall trend down to sell, I will find myself in a lot of problems. Okay. But I'm looking out for, I want to trade today. Like I'm looking for entry point for today. Is it going up or is it going down? So I want to join the immediate trend, right? Which I can get for my 4 hours or my daily. So we have determined our trend. We have determined our trend H4. Now we back to H1. It means from the uptrend we are looking out for now, it means what? Are we looking out for buy or sell? Are we looking out for buy or sell? Yeah, I need your responses. Are we looking out for buys or sells? We have determined is up. So should we be buying or should we be selling? Buy, buy, buy. Excellent. Thank you so much. Thank you so much. So now how do I look for my buy? I come back to my lower time frame, either my H1 preferably. Okay. So I start looking for entries to buy. And what I recommend is just simply look out for liquidity, and which is clusters. Okay, which is cluster. So I zoom in, I look for my cluster. Now I had this cluster here yesterday. I draw this as my liquidity. Am I right, guys? Am I right? Am I right? Okay. Organ Creed, yeah, but it's down daily. Yes, somewhat, but not completely. So I draw this as my liquidity. So I'm asking now, am I right? This area I drew as my liquidity, am I right? Yes, yes, I'm right. I'm right. Now, I will notice something again, that from even the day before, because I used yesterday's liquidity to trade today, and I can as well merge it with, on a particular day, there was liquidity here. Liquidity here. That was for Friday. And it is Friday's liquidity that Monday, which was yesterday, came back and tapped into before pulling up, right? So yesterday they had a cluster. So I can merge Friday's liquidity zone and yesterday's zone together. I can merge them together and use them to trade for today. Sorry, let me pull this out, right? So this is Friday's zone and So it makes my liquidity zone very wide, right? In this bullish candle, it is zone. Now check, USD is stronger than GBP right now. But why am I not seeing it keep falling? Because it has entered a liquidity zone and it's just trying to respect that zone. So from all indication, what are we to do? Buy or sell? Buy or sell? From all indication, am I to be buying or to be selling? All things being equal. GBP USD. Buy, right? Excellent. Excellent. Now, although price has started pulling up and my zone is a very wide zone, if I buy from where price is right now, my stop loss is going to be very wide. I don't like too wide stop loss, but yeah, liquidity in case things go south, so that I can quickly just do damage control. There was a liquidity zone around this area, this cluster, right? Now, if you notice, the following day even tapped into it before pulling up. Are you seeing what I'm saying? This liquidity zone for this day. It tapped into it that day. The following day tapped into it and kept going up. That means if I enter a buy from here and things go south, takes me out of my stop loss, where can I buy from again? Here. So I have plan A and I have plan B. And at the same time, if I'm doing my plan B, I also have my stop loss somewhere below. Some people can calculate 20 pips, some can calculate 10 pips, whatever pips you want to calculate, just have your stop loss somewhere below. Right? Good. Excellent. Some people need entry confirmation like a bullish engulfing. So for instance, if this candle ends up bullish like this, that means it engulfs this particular candle. Yes. So we should keep buying. Yeah, some people still need entry, but these are the basic things you need to be doing. Trade hints from today analysis because the nature of my work now. Okay. John Collins, please drop your email address for me, please. Just drop your email address. You can drop it for me privately then, or you can drop it here, anyone you want to do. All right, so you'll be attended to. What candlestick formation do you look at for a liquidity zone? No, not really. Candle formation helps us to determine either there's a reversal or there's a continuation, that's price action. But for liquidity, there's nothing specific. Basically, the rule is the candles are forming high, low, high, low. It forms a small range for a range. And they are not usually massive candles. They are not massive candles. Usually, they are not massive candles, right? Small candles, either like this or a little bit bigger, that goes up, down, up, down, up, down, up, down. All right. So things like this one is a range. This one too still qualifies. They are small candles. They are short. They are not long, right? So they form that liquidity areas. Price is trying to rest to determine if you want to continue or if you want to do a pullback before that direction. So that's what we are doing. So on GBPUSD also, we are also doing the same buy, right? Okay. I thought I was talking about, okay, you need Misan Ngo. Sorry if I don't pronounce your name right. Okay, noted. So your account manager will get back to you within the hour, right? Okay, so now I know we've taken a lot of time, but I'm sure you've learned the simple way to determine your entries if you want to buy or you want to sell for today. Now, once you draw your liquidity for today, I think almost everything we're doing, price is almost at that liquidity area, so that's why we are taking the trade. There are times you need to wait for it. What if price was up here and your liquidity is down here? You will need to wait for price to come to your liquidity before you can do anything, right? So that's where you wait for price. Okay, you wait for price. If price was here, your liquidity is here, wait for it to tap into it before you enter the trade. Okay. Entry confirmation, you can look out for reversal patterns. For instance, you can look out for hammer. This is a little bit of a hammer inside my liquidity zone, a hammer or a bullish engulfing or a morning star. Morning star, a bearish, a bullish, and another massive bullish candle. If you want to discuss all of that, there's no time for that. Just please visit our academy, Rally Trade, and get the knowledge of all of these things. People who benefit a lot from this session this morning are those who have attended one or two of our classes, have some basic knowledge. Those are the persons that really, really benefit from what we have done this morning. And if we look at the result of what we have done, let's see. Okay, so the euro dollar is still trying to struggle, but at least maybe some persons should have been in profit. I don't know. AUDUSD, I think some persons should be in profit, maybe. And if you've taken the GBPUSD, possibly. So just make sure you have your stop loss in place. Okay. So which one are we doing next? Let's look out for oil. Oil. Now, things start becoming more technical. Yeah, when we are looking out for some trades. No. Sorry, I'm just trying to pick out the mail so the account managers can respond. Just replicate this same thing we have done here on anything you want to trade, anything whatsoever. Replicate it and yeah, you should have your result. Just a minute, please. Just a minute. Okay, so we can actually continue right now. So this is oil. My name is Victor. Abolari Victor. For the analysis, right? Okay, okay, I'll drop my number. I'll drop my number at the end. I'll drop my number. Okay, good. All right, so let's quickly look at oil. Let's quickly look at oil. So for oil, I want to do this on a fresh note. Let me look at my support resistance. Okay, so for this guy now, let's look out for our liquidity. So first things first, guys. What am I looking out for? I'm looking out for my. So for those who have been joining us from the beginning, what was the first thing? Trend. Thank you, Moba. So let's quickly look out for our trend. And how do I do that? What time frame? Direction. What time frame? 4 hours. Thank you. Thank you. So H4. I can use H4. I can use D1. So now, what's my current direction for this guy now? My current direction. My current direction. This one might look a bit dicey. But what's the current trend? What do you think? Let's see. Yes, the current trend. Up, 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 up. Okay. Range. Range. Oh, some people are now getting more range. Okay. Yeah. Now, yes, it did up. Did down. Up. And it's currently doing what? Down. But inside the up and down, so you are right if you say down, and you are as well right if you say range. The current one now is down. Oh, sorry. The current one now is down. Down. Sorry, this is what I'm looking at. See, it's down. The current one is down. Previously it was up. Now, the oil, the rate at which the direction change is faster than current. Oil does a lot of range. For instance, see the same thing happening here. Down, up, down, up, down, before it finally went massively in one direction. Now, for oil, up, down, before, if you go back again, notice that it will do up, down, before one direction. Notice that it will do a lot of range, up, down, up, down, up, down, up, down. Instrument behaves are different from each other. Okay, so this up, down, and range. Now, the current one is what? Is down. Range, and this is the range, and this is the. It means that if it's doing up, let me now go back to my H1. This is my H1. Up mostly, sorry, down from here and goes as high as this. Then if it's doing that as low as this point, there's a possibility that it will do what? Reverse again, right? So for now, time frame. So what am I looking out for now? Look, to form a resistance for me, okay? Liquidity to form a resistance for me. So where do I pick out liquidity? From here, there was a small range here. That was from. Send it into the future. You will notice that our liquidity zone right now. Do you agree? Oil, OILS, not WTI, not WTI. Do you agree? Oil is in. So it means that what am I to do now? Buy or sell? All things being equal. Except I'm looking out for reversal. Is already inside my liquidity zone. Is there. Now, right where price is right now, what am I to do? I am to wait for this guy to go as zone, that range, before finally falling, right? It says I have my stop loss, right? But guys, I can have my stop loss. Oil is weightier than oil. Sell, exactly. That means, Lola, you are buying oil because of this bullish massive candle. Okay. I can understand why you want to buy. No, please, no. Instant buy. No, no. Not really. Not really. Not really. What you ought to be doing is a sell. If it buys, it's an impulsive move. That's not the real direction price ought to go. It needs to finish what it started by going all the way down to this place. Mop up all sell side liquidity. Mop everything. Once it can get as low as this point here, then we can start buying it like before. Buying, start buying, start buying, start buying, start buying. All right. Before we can start buying, price need to mop up all of this, before we can start buying. So for now, we are still in that downward process. So we are only looking out for sell. Thank you, Dan. We're only looking out for sell. Okay. Only looking out for sell. So I'm just trying to show us where we can sell. So can somebody try it? Has anybody even entered the sell? You should be in profit already. Yes, it's a recurring zone. It's a range. Doctor, it's a range. Yes, it's a range. Has anyone entered this? Let's even try it. You can even, if you want, you can just do a few seconds, enter. Let's see if you can just scalp it out profit. Now, even if this guy will go up, it will struggle here because there's a liquidity here. Yes, instant sell. There's a liquidity here, but you have your stop loss. Somewhere above. Why is it sell? Okay, that's what we just explained. Looking out for liquidity, our directional bias is down from our 4 hours time frame. 4 hours, up, down, up, and we're currently having a downward movement. And inside our up, down, it forms a large range for us, which is from here to here. So every time it goes up, it gets here before coming down. It gets here before coming down. So it's still in this process of coming down, right? So that we are still looking out for sell. Then we go to our H1 time frame to look out for liquidity. Liquidity is that point that we can join our sells, right? So we have from yesterday, we have a little bit of liquidity here, a little bit of range, not a strong one though, but there's liquidity here. So we map it out and extend it to today. So once price taps into it, it's expected that price should fall. Okay, so that is why we are selling. Now we'll stop selling when price comes all the way down to any of these points here. Then we can look out for buys again. Okay, that's for oil. Wow, time has really, really gone. And the stop loss is at 87.65, 87.65. Okay, so please just replicate these same things on any instrument, be it your indices, your agro commodities, but the way they behave might just be slightly different. Like slight differences, but the same principle. Slight differences, just the same principle, right? For those who don't finally or really, really understand what I just said or my explanations, what we've done today, please head back to our YouTube at Rally Trade and you watch, do a recap of this video from the beginning to the end, this session. Okay. Please contact your account managers for proper guidance and prepare for Friday NFP. Okay. Prepare for Friday NFP. So I've dropped it here. But if you contact me, I'll still route you mostly to your account managers. You're welcome, Sylvester. You're welcome. All right. So for those who drop their emails, your account managers will contact you within the hour, and your challenge will be, I'm sorry, we can't take more, but just apply the same principle on every other thing. But I'm sorry. All right. So thank you very much. Thank you very much for attending this session. Looking forward to seeing you next time. Enjoy a peaceful and a wonderful day. Now, Euro USD is selling. Yes, just leave it. Your stop loss is there. Let's see what will happen in the next hour or two. All right, just leave it. Price behaves that way. Yeah, I've dropped my number. I've dropped it. I've dropped it. My number and my name, Victor. I've dropped it. All right. So don't be worried. Don't be weary. That's why I say risk management. Make sure you have risk management. Your stop loss should be in place. Thank you very much for joining Money Market Review. Please head on to our YouTube channel at Rally Trade to watch this session. And as well, join by 2 p.m. for our live trading sessions. See you in the afternoon. Thank you so much.